Hey there, it's Will again. I'm going to talk about the markets mostly. Um, I've done my recent video. I talked about the general market and sort of sectors that you could focus on, and then even stocks within those sectors. So if you look at Russell 2000, you have this uptrend here, like a nice slope, 45-degree angle. Then you have this flat period, and you can see it's just going horizontal. There was some negative divergence with the MACD. You can see decline here, a bit of a bump here where it broke. But you have this point like where you bounced here. So you have a couple of resistance points, and then you had a third one. And so this is a range bound thing. So I was like, saying it wasn't great. And occasionally we have these dips below the 50-day. But you can see here that, it's done it again. So we broke the 50 and then the gap down. So a gap down is, this is pre-market, but so you don't know exactly what's going to happen by the time the market opens in less than 2 hours. But, that doesn't look good. In the NASDAQ, of course, I mentioned that, broke this high and it was quite high. But the problem on the other side of things was, it gets quite high. And so it gets extended, in that sense. But you never know for sure. It could keep, when it's going to stop going up like that. So, but if you look here, like what you want to do is try to look back at where you might want to get in. So here, once you got back up above the 50 and the 21 EMA, you also see this cross up of the MACD, and basically rising stochastic as well. So, even if you decide it's in an uptrend that you want to get in, you try to train yourself to get in a bit earlier in the trend, like when you see these crosses and stuff like that. So one of the issues or tricks with this stuff is being patient and waiting for an opportunity. So and trying to get in at those earlier entries. So we'll see what happens with this. But you see here how we have this. Now that's just today, but we have this, downturn of the MACD. So, and, we're up fairly high in the stochastic, which is the overbought area. So, you're at a higher risk for sure. Dow Jones, today we're breaking below the 50. And of course, this is pre-market again. But we did have this break recently and a sort of a rebound, and we're above the 50-day moving average. So, it was looking like, it might recover. But this is what I was talking about in previous videos. In the last one, if you decide, wherever you decide to buy, you have to have an idea of where you would get out, whether it goes down or if it in the future goes up, like when you're going to sell. So if you buy, because it got up above the 50 and the MACD crossed, you would probably want to sell if it closes below the 50. So today, you don't have to sell right away in the morning, but today, if it closes below. The other thing you can do is use a recent low as your stop. So that gives you, a bigger drop, more potential loss. But a lot of times these low points, you'll see here that, you keep increasing the low. Here it was very close, so you probably could have held it. This was like, you might have got stopped out if you had a stop at this point. But if you bought in earlier and you're riding it up and then all of a sudden it breaks, that would be a potential sell point. So it depends kind of on your strategy. Like when I do these videos, I'm not really saying, you have to do it this way. If you were looking at the 21, it's above the 50, and then it just kind of kisses the line. It's still generally above the 50. So, but you get delayed in that situation. So it can drop a lot before the 21 actually crosses down. Like here, by the time when this crossed, you're down way down at the 200, you ended up going right back up again. There's nothing wrong with buying back in if it comes back up again, but using the moving averages, you can sort of, have a delayed reaction. So if we look at the S&P, everything was looking pretty good, but this candle is not a great looking candle. This is in the pre-market, so we'll see what happens. But a lot of these drops haven't been too bad, so you never know what's going to happen. But you have to set your rules. If you purchased, like, once you saw it bounce up above the 50, you could use the 50-day as your moving average, as your sell. You can put an alert. So what I like about TC2000, there's many things. What I was going to mention was, if you want to set an alert when it crosses the 21 or the 50, you can go to this where it says by whatever the ETF or stock is, and say set alert, and then price history is, and then what I do is scroll down. There's a 21. You can say above the 21, or say below the 21 if you're looking at, or below the 50. And then it creates an alert, and you'll get a text or in an email. So you don't have to stare at the computer all day watching this thing. But you need to know ahead of time, like, what's your rule? Like here, if you said it breaks below the 21, you would sell if it closes below the 21. So you might have sold here. And then if it gets back up above, you can see how you can get sort of, stopped out over and over again. If you do that, it doesn't always work. It depends on the market. But like if you had the 50-day if it closed below 50, you would sell. But once it gets back up above the 50, you can buy. So there's sometimes you lose a few percent here and there, but it gets you right back in, and you're basically in. This might have got you out, and the next day you got back in. So it depends how sensitive you want to be. One close below the 50, you might see if it does it again the second time, just bounce right back up. So what I've been noticing is that we had a huge downtrend this is the US Canadian, but in the dollar index. And then you were starting to see this rebound. I'll go to bonds. So TLT is the 20-year Treasury bond. So same sort of thing, a big decline. And then we started to see a rise in April. And now we broke up above the 200. So that could cause some problems in the markets. When bonds go up, a lot of times the stocks go down. So you can notice that the interest rates, the 10-year yield has been going down. As bond prices go up, the yield goes down. So this is something pretty important. The bond market's huge. So and we see today in the markets, like I was just showing, the a bit of a down day by the looks of it. So I think that this is a bit of a tricky period. So I wouldn't in terms of stocks and things, I wouldn't be going too hard into the market right now. And there's a transition could be happening with the bonds, but right now, if we look at the sectors, this is in the morning. You have steel and wood up today, but you're below the 50. So nothing really great, but you got to watch these bonds. So let's see if I think there's UUP. This is the US dollar index. So after this big downtrend, we're seeing this come back here. So we'll see how far it goes. But just thought I'd give you a general idea of the markets and how to set alerts at certain points. I've talked about it multiple times, but it's important to to go over. So I like to have a watch list with just the markets on it, and then I have another on the tab. So that's nice with TC2000 is that there's compact information. Like with this one click on this tab, I now have all the sectors. I've got other columns where you can sort by whatever you're looking for. If you want to find low stochastics, you can add a chart and look at things that are, you know, in a low downtrend, like the Chinese stuff. We have a down in the banks, the regional banks. Airlines are down quite far here. You can see that doesn't mean you buy right away, but you can see that these low stochastics are usually fairly low points in terms of relatively speaking, over here as well. If you're going to be like dollar cost averaging or buying dips and stuff like that, this stuff, you know, obviously now we just broke below the 200, so it's in a bit of a downtrend. So I like to see it starting to come back up again. But once you're down there, you know that there's a chance at some point, you know, of a recovery. So you see here, like I drew this line, you've got this break of the downtrend, of a pullback, and then it starts to go up. So if you want to get TC2000, if you haven't, thank you to everybody who's picked it up. I hope you're enjoying it. I've got the gold plan. If you can get a link for a free trial or $25 off in the description below the video. I've got the gold plan and US real-time data. That's why I see the 751. That's the pre-market time. So I'm actually seeing the candle from today, this morning. All right, guys, we'll talk to you in the next video.